the consignor's account debit to cash. Now, this is a small example. Okay, you can see it later on. Paul of Delhi, whose financial year ends on 31st December, consigned goods to Kenneth, his agent in Mumbai. All transactions were started in 2013 and costing 100,000. I'm sorry, 10 lakh. As a carriage paid 1 lakh. Okay, and the consignee sends an account sale on July 31st when all the goods have been sold, and there's a sale proceed of 15 lakhs, 10 lakhs worth of goods sold for 15 lakhs, and there are expenses of 50 and distribution expenses of 60 and the commission 6% on sales, which is 90,000. So 6% of 15,000, you can check it, it comes around 90,000. And Kenneth paid the balancing figure after checking the account. He paid 13 lakhs to Paul. Okay, let us look at how this looks. Consignment account. Okay, the date column, the particulars column, the amount. The date column, particulars column, the amount. Okay, now the sale proceeds of 15 lakhs and the goods sent on consignment 10 lakhs. Okay, there's a carriage inward. Yeah, there is a carriage inward. Okay, 100, that is 1 lakh. And import duty 50, distribution expenses 60, and the commission that he is supposed to receive is 90, and there's a profit on consignment. Okay, there's a profit on consignment which is to be received by the consignor. He accounts. Okay, he accounts. The consignee has to pay this much. Now, this is in the books of Paul. Who is this? Paul, in this case. Paul is a, look at this. Paul is a gentleman who consigned goods to Kenneth. For us, who is Paul? In this example, who is Paul?
Consignor.
Paul is a consignor. Okay? Paul is a consignor. 200,000 is the profit on consignment. There's a good sent on consignment account prepared. Okay, there's only one 10 lakhs is the, I'm removing 3 zeros, right? So that we can have it conveniently, right? Then this is the, this, just ignore. Yeah, consignee's account. Just ignore this, okay? Just ignore this. Yeah, look at this. This not Angel. This is Kenneth. Okay, this is Kenneth. This is Kenneth. Yeah, the consignee. Okay. Now 50 rupees is import duty, distribution expenses 60, commission 90, right? 1500 are sold, and all these are your expenses, consignee's expenses. Okay, and you are to send me 13 lakhs back. Okay, 13 lakhs back. Okay, it is not Angel. Okay, please correct it. I'll send the corrected version of this slide. So Kenneth's books. Kenneth's books. This also you can ignore. Yeah. Yeah, there will be corrected version sent to you. Okay, look at this. This is important intricacy in the consignment. Valuation of unsold stock. Unsold stock should be valued taking into account all the costs incurred both by the consignor and consignee in connection with the consignment. Look at this. All the costs. I wrote all the costs but it is not all the costs. It is all direct costs. Non-recurring costs, okay, incurred both by the consignor and the consignee. Now there is a distinction of direct and indirect in the case of consignee only, not in the case of consignor. For the consignor, all expenses are direct costs. Okay. Now the value of this unsold stock should be shown as carried down balance on the consignment account, right? Now value of unsold stock, cost of the goods valued at cost slash market price, whichever is lower. Add appropriate expenses of the consignor. Add proportionate expenses of the consignee. Only non-recurring expenses, direct expenses of the consignee, that is, exclude recurring expenses like rent, like insurance, like selling and other expenses. Okay, these things are to be excluded. Proportionate expense of the consignor, all expense of consignor are direct, and the expense of consignee are two types, direct and indirect. You will take only direct expenses, which are non-recurring in nature. Non-recurring in nature. Okay. Next. This is another illustration. Okay. Value of the stock. Look at this. 100 radios, each radio costs 800. Okay. Paul pays expenses 1000, insurance 400, carriage 500. Okay. And pays these expenses: custom duty, unloading charge, go down rent, salary to salesman. Goods reach the go down of the consignment. At the end of the year, 25 radios remain unsold with Anne. The market value of each radio is 850. You are required to calculate value of the closing stock. Now there is a market value given 850. What is our condition? What is our condition? What is the condition? Valued at cost or market price, whichever is lower. Whichever is lower. This is market price. Then we will value the cost. How many radios are there? How many radios are there? 25 radios are left over. Do you hear me? Are you able to hear me?
Yes, sir.
Yes, sir.
Can you hear me, please?
Yes, sir.
Yeah. So out of 100, 25 radios are left over. Okay. Now each radio is costing 800. Paul pays the following expenses: freight 1000 and insurance 400, carriage 500. All expenses of Paul are direct expenses. What is the total expense of Paul? 1000 plus 4 plus 5, 1900. Okay, 1900. And there's no problem with the expenses of Paul because they're all direct expenses. Now there's a problem with Annie's expenses. Now you have to distinguish, look at this and distinguish what are the direct expenses and what are the indirect expenses here. What are the direct expenses? What are the indirect expenses? Can you see the paragraph here along the cursor? I'm just moving the cursor. Can you see it? Hello? What are the direct expenses? What are the indirect expenses?
Unloading charges is Non-recurring expense,
Direct.
direct expense.
Okay. Okay.
Custom duty is also direct.
Okay.
Go down rent and salary to salesman are indirect.
Indirect. Okay. That is 500 and 2000 or direct. This 500 and this 2000 or direct. And this 500 and this 500 or indirect. So 500 of go down rent, 500 of salary to salesman or recurring indirect expenses. Okay. Now goods reach the go down. You're required to calculate the closing stock. You're required to calculate the closing stock. Each radio is costing 800, 25 radios, 20,000. Now, 25% only is left over. 25% of direct expenses we have to calculate, right? Freight, 25% of freight, 1000 into 25 by 100, 250. Insurance, 400. 25 by 100 into 400 is 100. Carriage, 500 into 25 by 100 is 125. Customs duty. Now, customs duty, yeah, look at this. Customs duty. Who pays the customs duty? Who pays the customs duty? The consignee pays the customs duty. And the total amount is 2000 for all 100 radios. Now, for 25 radios, 2000 into 25 by 100, 500. 1100 is the total amount of the expenses incurred, both by the consignee. Look at this. The consignee's expenses. Consignee's expense 100, 125, 500. And the consignor's expenses 250. All the direct expenses of both the consignor and the consignee are included to calculate the cost of the units left over. Actual cost is 20,000 and this 1100 is the expenses incurred, okay, to make these goods in good condition and to made available, okay, to the consignee. The total amount is 21,100 is the total value of the closing stock. Okay, loss of goods on goods may be lost or destroyed or damaged in the transit or in the warehouse of the consignee, and that loss is divided into broad segments: normal loss and abnormal loss. And this is the normal loss, and this loss is due to unavoidable situations like leakage, pilferage, and evaporation due to natural causes. Some of the goods may shrink, some of the goods may get evaporated, some of the chemical products, or when you're bringing coal, the coal may be leaked out or broken, and out of the truck it may be leaked out. So they're not avoidable, unavoidable. They're bound to happen. Such losses form part of the cost of goods and no additional adjustment is required. And the quantity of loss is subtracted from the total quantity, okay, sent by the consignor, right? Now, this is including the value of the goods sold and closing stock by inflating the rate per unit. Value of the closing stock is equal to total value of the goods sent by net quantity received by the consignee. The total value of the goods sent may be 5,000. The net quantity of the goods received by the consignee into unsold quantity. Net quantity received by the consignee and unsold quantity. Okay, net quantity received is 800 by unsold quantity 200 multiplied with the total value of the goods sent gives you the value of the closing stock. The net quantity received, goods consigned quantity minus the normal loss gives you goods consigned quantity minus normal loss gives you the net quantity received. You might have consigned 10,000 worth goods, but there is 2% normal loss in the transit as we discussed. What is the net quantity received by the consignee? You have to make out. Now, Angel consigned 2,000 tons of coal at rupees 50 per ton to Bonnie, and she paid 20,000 as freight. Due to normal wastage, only 1950 tons were received by Bonnie, and Bonnie paid 5,000 rupees as unloading and carriage charges. The goods unsold amount to 650. Calculate unsold stock. 2,000 tons at 50 per ton, 100,000. Freight by the consigner, 20,000. Unloading charge, 5,000 rupees. These are all, and the total cost is 125. 125 is, what is 125? Look at this. 125. 125 is the total value of the goods sent. The total value of the goods sent. Okay, the total value of the goods sent. The charges paid. All these are in the goods sent, so that it became 25,000. That is the total value of the goods multiplied with this formula. Multiplied with net quantity received by the consignee. Net quantity received by the consignee. Okay, net quantity received by the consignee into unsold stock. Okay, I think this is the formula is reversed, right? Yeah, this should be
So what is unloading charges, sir?
unloading, loading and unloading charge. When the goods are received, you have to pay for the laborers to unload, na? That is unloading charge. Yeah, 125 multiplied with 650 by 1950 gives you the total value of the 650 tons. 650 tons. Okay, that is 41,677 rupees. Okay, now there are some errors. I'll have to correct it. Okay, so many errors. Now, abnormal loss. Normal loss we have seen. Abnormal loss occurs on account of reasons which are accidental or which may rarely happen. They are like theft, riots, accidents, fire, earthquakes, etc. Loss could occur in transit or consignee store also. It may be stolen from, okay, it may be stolen from the warehouse, and it may be during the transportation, the driver is attacked and the truck is taken away and the goods are lost. It may happen during the transit, it may happen during the it may happen at the warehouse of the consignee. Now this is how you can calculate the abnormal loss. What is the value of the goods sent on consignment? Add the non-recurring expenses. Okay, both the consignor's non-recurring expenses, the consignee's non-recurring expenses. Now remember, non-recurring expenses means direct expenses, one-time expenses. Understand it as one-time expense. Non-recurring means direct. Non-recurring means direct. Direct means one time. And the total cost before the abnormal loss. Okay, is this. If this is A and this is these two put together B, and this is the value. And the value of the abnormal loss calculation is total cost plus 1 by total units consigned into abnormal loss in units. Let's take, yeah. Yeah. Now, how to record this abnormal loss? Abnormal loss account to consignment means in the consignment account, the abnormal loss is credited. For abnormal loss transferred, profit and loss to abnormal loss, that is later. On payment of insurance premium, for this loss, you will claim the insurance and you will receive the amount. Okay. And when you receive the claim, then you have to account. Okay. Consignment account, yeah, actually, it is like this. Yeah. Okay. Just one second more. 1, 2, 3, 4. Okay. These four I'll just club in one word. Okay, I'll say when you're taking the insurance policy for the normal loss or abnormal loss from the insurance company, this is an expense. Okay, and this expense is debited to the consignment account. When this event occurs, damage occurs, and you get a claim, that claim is credited to the consignment account. That's it. Okay. So this is the end of the main points of consignment. Now there are some typographical errors. The names, there are from one place to another place while copying pasting. There are some names typed wrongly and some letters also typed wrongly, and I will just correct those things and then give you the presentation. Okay. And this is the end of the consignment. Now let me uh, get the questions from you. Let me get the questions from you. Any questions, please?